What's happening, investors? Welcome back to another video. This video is for entertainment purposes only, and we're speaking about MicroVision, ticker symbol MVIS. They are a company that's been in the eyesight of Reddit Wall Street bets, and in fact, they've actually gained more momentum lately than GameStop did. So I don't have to tell you how big that is and how much hype this company must have. However, over the past day, they actually have seen a 14% decrease in stock price for the day and a further 21% in the after hours. Now, the whole reason why this company got caught up in this Wall Street bet stuff is obviously, like all of them, it is highly shorted. It is shorted around 20%, and the Wall Street bettors jumped on to try and create that momentum for a short squeeze. And we have seen the stock really go up because of this, and we'll get into all that. We'll get into why it's falling and where I see it going in this video. But before we do, for those of you who are new here, my name is Dean. I love researching and talking about stocks. I do it because I enjoy investing to try and make money, and I thought, hey, let's make some videos, put it on YouTube, try help you make some money also. And all I ask in return is for you to smash the like button, add the subscribe button to your portfolio, and turn on notifications. We talk about stocks every day. We love covering stocks like Neo, ChargePoint, and a whole heap of great growth stocks, and try and make some money. That's what we're here for. So if you can just do that for me now, that's all I ask. I'd really appreciate it. If we look at MicroVision for the past year, in the past 12 months, that stock is up over 5,000%. And this doesn't happen for no reason. This happens because this is a good company that investors thought was a good company, and people were getting in and buying and buying and buying. And then obviously Wall Street bets really helped, because we saw here, if we have a look from April 30th to around December 11, we did see a slight increase in price. However, not much. It's been trading very sideways. However, look what happened once we started getting into December 18, 17, into January, and then February 2nd. From February 2nd, the stock went from $7.62, which is already up a lot for the year. They started the year at around $5.38, and then they went to that $7 range, and then the stock just rocketed all the way up to $23.72 a share. However, like we've seen with a lot of these short squeezes, once it gets to these highs, people tend to get burnt. People buying at these high prices, and then the stock just plummets. And it did plummet. It went up from $23.72 to $11 a share. It is very volatile, and it's such a small market cap company. So with so many eyes on it, with so much hype and so many people buying in and selling out, there is a lot of movement in the stock. So it isn't a safe investment. It's very risky. However, if you swing trade this right, there is potential to make a lot of money. And I'm sure a lot of people did make a lot of money. I mean, imagine buying this 1 year ago at $1.10. Even now, even though they've dropped so much in the past week, in the past day even, they're still up so much. They're still up over 5,000%. If we look at the past 5 days, look at the volatility from $14 a share to $27 a share, now back down to $18 a share. It is extremely volatile, and the last day it looks like the bears are winning this bear bull fight, because they've gone down 14.24% and a further 21% in the after hours. The reason why this is happening is because the company had less than amazing financial results. If we have a look at this little article here, MVIS stock, MicroVision rallies in pre-market Q1 results out Thursday. So there was a rally, people buying into the stock and pushing the stock price up because people were very excited and hyped for the earnings to come out. However, unfortunately, when their quarterly results came out, they were less than significant. We saw revenue of the first quarter of 2021 at only 0.5 million, only $500,000. And that's for a company with a market cap of 2.84 billion. Now, if we look at what it says here, the revenue went from 0.5 million. Last year, this time last year, it was at 1.5 million. So there was a really big decrease here. And the company saw a net loss of 6.2 million compared to a net loss of 4.9 million last year. So the results weren't good at all, and that gave a lot of bulls. That was it for them. That's when they had to sell, and with the short interest, the stock did go down very, very hard. And I wouldn't be surprised if it continues to go down tomorrow. In saying that, I had a look at what people on Wall Street Bets are saying, and they were saying, a lot of them were saying that they're going to keep holding or buy more. So there is still some bullish outlook on this stock. However, another common trend I saw is people said they keep losing money with these short squeeze because they don't know when to sell. They keep holding and holding and holding, and I understand that's the whole ideology behind this, but a lot of people either don't take their profits or buy in at those high prices thinking it will go higher and lose money. So the way I see it, if you want to make money with this Wall Street Bet swing trading, of course, I'm not a financial advisor. This is not financial advice. In fact, this is really, really high risk. But if you want to make money doing this with companies like MicroVision, you need to either buy in as soon as it starts gaining momentum and be ready to sell. Don't be greedy. Have your price target, judge it off the momentum, and be ready to sell. Or you wait till a massive drop to buy in, because if we go back and look at the 6-month chart, you can see that there was a lot of dip opportunities. It went from $23 a share back to 11. Had you bought in here and maybe sold even now $18 a share, or you sold here, you timed it perfectly, which is obviously extremely hard. If we could all time this perfectly, we'd all be very, very rich and probably not watching YouTube videos right now. We'd be retired on a yacht if you could retire, if you could time the market perfectly, that is. And if you could time it early, you could have even bought here $10, sold it at 26. So my advice here is buy in on the big dips, but be careful, because when people lose money in a stock like this, there have been people would have lost money. People would have bought in at least $26 a share range, and now it's at 18. They might have got scared. It might drop down further, so they might have been right and they sold out. And when this happens, it gives them a bad taste to try this again, which would obviously cause the stock to keep going down, because more people are going to sell and people won't want to buy in, and you can be stuck holding a bag. So I'd keep that in the back of your mind. I also want to show you the Google stock trends of the past 30 days. We see this massive spike from April 26th to April 27. We saw a huge momentum, and this is because of the earnings. People were waiting for them to come out. If they were good, make no mistake, this stock could have pumped a lot harder. But don't forget also, even on good earnings, people sell out because there's people just here swing trading the news. A lot of people who bought into this company would have been hoping for good results just to sell out of it, which of course puts more downward pressure on this stock. My advice here is, if you do want to get in on this MVIS stock, I wouldn't get in now. I would wait to see what happens over the next week. You might miss a run up, but with these bad results and just the way we're seeing this stock going, it could drop down a lot more, and it is high risk. No matter how you do this, it's very, very high risk. So please keep that in your back of your mind. If you want to invest long term, if you're new to investing, I wouldn't recommend trying this. I would recommend maybe getting into a company that is very, very solid and going to be a long-term winner with really good projections, like Neo. I'm not saying this isn't a great company. Please don't get this mixed up. Don't dislike this video. I'm not saying this is a bad company. I'm not saying that it doesn't have a lot of potential. However, at these rates, after going up, even though they're down so much, they're still up over 5,000% for the year, for the past 12 months, not this year, not 2021, but the past 12 months from this time last year to now. They're up over 5,000%, which is obviously a lot. So it does present its fair amount of risk. That's my thoughts on MVIS stock. Check out my videos on Mara and ChargePoint. I'll leave them at the end of this one. I've got heaps of videos on my channel. I cover stocks all the time. So if you haven't done so already, hit the like button, subscribe, turn on notifications, and let me know in the comments. Are you invested in this company? Are you planning to hold? Are you planning to sell? Where do you see it going? I'd be really, really interested, and I'm going to make a follow-up video because this stock moves of what people do. So I'd love to see what people are saying they're planning to do in the comments, and maybe we can make a further video that's a bit more in-depth based off what you guys think is going to happen, and we can try and work this out together. So that's going to wrap up this video, and I will see you all in the next one.